And here are the crypto top headlines. First up, BlackRock's iShares Bitcoin ETF mysteriously disappears from, then reappears on DTCC site. Next, Coinbase poised to make final pitch in bid to kill SEC accusations quickly. Also, spot Bitcoin ETF approvals to push BTC up to 73,000, likely adding $1 trillion to crypto's market cap. Plus, Ripple forges new partnership with Uphold to enhance underlying crypto liquidity infrastructure. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles and no speeches on my opinions, just bringing crypto's news to you. We are a new channel here on YouTube and would greatly appreciate it if you would click on the like and subscribe buttons as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, BlackRock's iShares Bitcoin ETF mysteriously disappears from and then reappears on DTCC site. BlackRock's Bitcoin ETF listing staged a sudden reappearance on the DTCC's website after disappearing for a few hours. The ticker for BlackRock's spot Bitcoin exchange-traded fund, IBTC, has reappeared on the Depository Trust and Clearing Corporation's, or DTCC, website after disappearing for a few hours. The price of Bitcoin surged to new yearly highs following the October 23rd surprise appearance of IBTC on the website, with markets frenzied over the sign of a potential soon-to-come spot ETF approval. When the ticker quietly disappeared from the site a few hours later, Bitcoin's price slumped nearly 3%, indicating that much of the trading activity seems to be hinged on watching ETF-related developments. Senior Bloomberg ETF analyst Eric Balchunas pointed out that the drama around the IBTC listing seemed to be responsible for briefly crashing the DTCC website. The DTCC doesn't typically witness this level of attention, Balchunas explained, which speaks to the uniqueness and intensity of this entire saga. Upon IBTC's relisting, one X-user highlighted that the previous listing showed a Y under the Create/Redeem column, while the new listing had an N. Bloomberg ETF analyst James Seifert responded to the query, saying he believes it indicates BlackRock is getting everything ready to launch if and when they get an SEC approval. The N just means it's not open for Create/Redeem because it's not live yet, Seifert added. On October 25th, Reuters report revealed the IBTC listing was added to the DTCC site in August, but was only widely noticed a few days ago. A DTCC spokesperson said it's standard practice for it to add securities to the NSCC security eligibility file in preparation for the launch of a new ETF to the market. Appearing on the list is not indicative of an outcome for any outstanding regulatory or other approval processes, the spokesperson added. Bitcoin has held steady following IBTC's reappearance and is up 0.15% in the last hour, according to CoinMarketCap data. Bitcoin is trading at $33,940, marking a 19.1% gain over the past week. Our next top headline, Coinbase poised to make final pitch in bid to kill SEC accusations quickly. The U.S. crypto exchange is ready to argue the SEC's claims about unregistered securities are missing evidence of actual contracts. Coinbase has a Tuesday filing deadline to answer the Securities and Exchange Commission's rebuttal of the company's motion to get its major enforcement action dismissed. The company is said to be ready to underline two legal arguments: that the tokens being traded don't represent investment contracts, and thus securities, and that the SEC is violating the major questions doctrine that outlines the relationship between regulators and Congress. Coinbase Global Inc., or COIN, is set to make its final case on Tuesday that a judge should spring it from the clutches of the U.S. Securities and Exchange Commission in its unregistered securities dispute. In Coinbase's last word on its motion to get the accusations tossed before trial, a person familiar with the plan said the company will double down on familiar arguments. The SEC hasn't demonstrated the transactions were investment contracts, and thus securities, because it hasn't shown any actual contracts existed, and the SEC is violating the major questions doctrine that basically holds that federal agencies have no business regulating novel areas that are awaiting congressional action. After Coinbase's Tuesday filing deadline, Judge Catherine Polk Fela of the U.S. District Court for the Southern District of New York will have the full arguments from both sides. The judge, who has signaled some skepticism of SEC arguments, will weigh whether Coinbase is irrefutable correct or that there is merit in the SEC's contention that the idea of an investment contract is broader than a traditional signed agreement. If she's strongly moved by Coinbase's legal argument, she can dismiss the case, though getting a government enforcement action thrown out at this stage is usually a long shot. The agency had originally targeted Coinbase with an enforcement action in June, and it represents one of the clearest confrontations between the U.S. securities regulator and the crypto industry, represented by a publicly listed U.S. company that's one of the biggest digital assets exchanges. The case's outcome could change the course of the industry in the U.S. This is an extremely important case for not just the cryptocurrency industry, but for the future of digital assets in America, said Jason Gottlieb, a lawyer who works with crypto clients at Morrison Cohen in New York. Howey test. Coinbase's motion to get an early judgment argued that the SEC is well out of bounds, but the agency responded that the so-called Howey test that legally determines whether something is a security is very flexible and is meant to be widely interpreted. If investors expected profit from a project, that's a central factor. Agency officials, including Chair Gary Gensler, have said. To distract from the fatal flaws in its legal arguments, Coinbase cries foul and seeks to blame the SEC for its current legal predicament, SEC lawyers said in their response to Coinbase earlier this month. But Coinbase has argued, and some judges seem to agree, that tokens aren't inherently securities themselves and that they have to be attached to an investment contract to be defined that way. The SEC's brief was more of the same, said Paul Grewal, Coinbase's chief legal officer, in a statement to CoinDesk. We look forward to laying out the facts in our final response brief. The SEC has suffered a series of court setbacks that have demonstrated the federal judges in its multi-front battle against the crypto industry aren't rushing to show the agency deference. The SEC's foundation that virtually all cryptocurrencies are securities and that unregistered companies trafficking in them are breaking securities law has developed significant cracks, most notably in the Ripple ruling that said that company didn't violate the law in selling its affiliated XRP cryptocurrency to retail customers. Major questions. Where the SEC may have some momentum is in Coinbase's other assertion that the major questions doctrine, the same legal theory that cost the Biden administration a recent loss in the dispute over canceling student loan debt, should keep the SEC from regulating in a space that Congress is writing legislation about. A recent decision from Judge Jed Rakoff in the Terraform Labs case, he argued that the SEC's regulation of crypto doesn't rise to the extraordinary cases that the doctrine is meant for, so the agency knows at least one judge in the same court has leaned toward its view. However, Rakoff was addressing a specific argument in a specific case, and he'd looked at the industry through the frame of the $1 trillion value of all the industry's tokens. The treatment of digital assets and the sale of digital assets is absolutely a major question, Gottlieb said. It's much larger than a $1 trillion question. It's quite literally the future of the global economy. Judge Fela will respond in the coming weeks and could ask the parties to come to court and make these same arguments in person. It could be 2024 before she makes her decision on this motion, but declining Coinbase's request doesn't necessarily represent a big win for the SEC. The case would then keep going into its next stages, in which Coinbase would continue to make its arguments in advance of a potential trial. And this isn't the only battle the SEC and Coinbase are waging in court. The company had also sued the SEC in April, demanding answers to its petition, asking the agency whether it would issue rules for crypto. That case may be approaching some conclusion because the SEC told that court that the agency's staff made a recommendation on October 10th to the 5-member commission on how to proceed with Coinbase's petition. Our next top headline, Spot Bitcoin ETF approvals to push BTC up to $73,000, likely adding $1 trillion to crypto's market cap. A recent study conducted by CryptoQuant, an on-chain analytics firm, has suggested that introducing spot exchange-traded funds, or ETFs, for Bitcoin may significantly bolster the cryptocurrency's market capitalization by approximately $1 trillion. According to the firm, while the approval of these ETFs is not anticipated in the immediate future, recent favorable court rulings in the cases of Grayscale's GBTC fund and XRP against the SEC have improved the chances of approval by the final deadline in March 2024. Upon the eventual approval of these ETFs, CryptoQuant predicted an influx of roughly $150 billion into the Bitcoin market, potentially increasing Bitcoin's market cap by anywhere from $450 billion to $900 billion. This growth is expected to occur as more institutions and retail investors embrace cryptocurrency. To support its argument, CryptoQuant highlighted that during bullish phases, new capital inflows lead to a rise in realized cap as coins change hands at higher prices than their initial purchase. Concurrently, the market cap experiences even more rapid growth due to the reevaluation of market prices. Notably, historical data reveals that during previous market peaks, such as December 2017, March and November 2022, Bitcoin's market cap expanded 3 to nearly 5 times its realized cap, indicating that for every $1 of new investment, the market cap increases by $3 to $5. The study also emphasized that the expected surge in market capitalization would surpass the previous inflow of funds into the GBTC fund during the last bull market cycle. GBTC currently stands as the largest Bitcoin fund, holding over 620,000 Bitcoins. Furthermore, the analysis suggested that the anticipated increase in Bitcoin's market capitalization could potentially lead to a substantial rise in Bitcoin's price, ranging from $50,000 to $73,000. CryptoQuant's findings echo those of crypto analyst Robin C., who recently shared a similar view, tweeting, "Bitcoin could reach $60,000 to $70,000 on ETF approval." According to the pundit, the imminent ETF approval is poised to usher in an estimated $150 to $200 billion influx into the world of Bitcoin. That said, although optimism has been rising within the cryptocurrency community due to the expectations of the SEC potentially approving various spot ETF filings from prominent financial players like BlackRock, Valkyrie, WisdomTree, ARK Invest, and Fidelity, the SEC's timeline for approving the first spot Bitcoin ETF remains uncertain. This uncertainty has persisted as the regulatory body continues to display a propensity for tightening its control over cryptocurrency regulations. At press time, Bitcoin was trading at $30,117 following a day marked by lackluster volatility. However, over the past week, the leading cryptocurrency has secured a modest gain of slightly over 6%. Our next top headline is a press release from Ripple. Ripple forges new partnership with Uphold to enhance underlying cryptocurrency liquidity infrastructure. Ripple, the leader in enterprise blockchain and crypto solutions, has announced a new partnership with Uphold, the global Web3 financial platform. The partnership will see Uphold provide Ripple with enhanced crypto liquidity capabilities to underpin and enhance its cross-border payments infrastructure. Best known for its flagship payments products, Ripple's blockchain and crypto enterprise solutions help customers globally to accelerate their business performance and scale by removing the need to pre-fund accounts around the world and freeing up trapped capital. With over 10 years of building blockchain solutions for finance, Ripple is transforming payments with its crypto-enabled enterprise solution that provides the ability to send payments 24/7, 365, and near real-time settlement. Pega Soltani, head of payments product at Ripple, said, "Our new partnership with Uphold enables us to enhance our underlying infrastructure, and Uphold's deep liquidity expertise further underpins Ripple's ability to offer fast and flexible cross-border payments around the world. We see this as the start of our relationship and are excited about what the future holds." As a leading Web3 financial platform, Uphold's superior trading architecture makes it easy to move value between fiat and crypto and across networks. Uphold is able to provide access from a wide range of crypto liquidity venues globally, enabling businesses to seamlessly serve customers and deliver payments. Ripple provides a tremendous valuable service to businesses making cross-border payments, and we are thrilled to be an essential part of it, said Simon McLaughlin, Chief Executive Officer at Uphold. The Uphold platform features a fully automated high-frequency trading stack connected to 30 underlying trading venues, allowing us to offer deep liquidity, multiple execution paths for transactions, and exceptionally tight spreads. Our partnership with Ripple illustrates how unique capabilities of our platform can be used by enterprises to make efficient crypto-to-fiat transfers and bank payouts. Ripple was the first company to address the multi-trillion-dollar pain points associated with cross-border payments, utilizing blockchain and crypto at scale. Through its state-of-the-art infrastructure, Ripple provides a superior end-to-end customer experience in a trusted and transparent way, enabling its clients to track payments in real time and forecast delivery times underpinned by clear pricing and FX rates. Its product offerings have since grown to address new use cases for businesses like liquidity management, tokenization, and custody solutions. Today, Ripple serves hundreds of customers in over 55 countries and 6 continents with payout capabilities in more than 70 markets and has processed $30 billion worth of volume and 20 million transactions since its payments solution was first launched. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.